Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with the market recap for today, 27th of October. So, finally, we got the earnings. Amazon missed revenue. They beat EPS, but they missed revenue. But the most important thing, as always, for this kind of companies is the forecast. Amazon said it expects to post fourth quarter revenue between 140 and 148 billion instead of the 155 that analysts are expecting. So they are lowering their expectations for the last quarter, and they are releasing mixed earnings. They basically sank 20%. So same as others like Meta, Microsoft, Tesla, with poor guidance, they are feeling the pain. But there's more. Apple beats in both EPS and revenue, but be careful. iPhone revenue lower than expected, iPad revenue lower than expected, and services revenue lower than expected. Services, Apple TV, and iPhones and iPads were getting lower revenue than expected. And I think what is key, apart from the strength that Apple is showing beating EPS and revenue overall, is that Apple did not provide official guidance for its fiscal quarter, which ends on December and contains Apple's biggest sales season of the year. So, it hasn't provided guidance since 2020, citing uncertainty, but come on, Apple. You have to provide guidance. You are releasing new iPhones and you are saying that you are not seeing high demand. So you were cutting production, you were saying that demand was not as high as you were expecting. You are releasing an iPhone and you are not providing guidance because are certain times. I think this is not fair and this is a mistake. But anyway, let's go to the charts. So basically, Amazon, as I was saying, is right now 70%. You check from top to bottom, it's 20%. 20% in the red, and I mean, it is what it is. Meta did the same, Microsoft did the same. They are lowering expectations in these growth big tech stocks. They have to feel the pain. But Apple is holding. They dip, but once details were released, I think people is buying this dip. In my opinion, I'm not investing more in Apple. I have a position in Apple and also in Amazon, but I don't think it's fair not to provide guidance. We will see. Nasdaq felt the pain initially, but Apple is trying to save the day. I was expecting Nasdaq to check these lows exactly as it did. I was expecting 11,250, 11,100, and 11,000. So as you can see, we are checking that Friday in which we were squeezing like crazy and started this big move. So right now we are losing all these three levels. We touched base on those and we are barely holding 11,000. We are trying to establish support for 11,100, but this pivot is super strong. We will see what happens tomorrow, but I would like to point out, to highlight the fact that all yields are pulling back quite a lot. This is the 2-year yields, this is the 10-year yields. Treasury bonds are pushing, high yield corporate bonds are pushing. Let's think about this. So big tech companies are reporting earnings lower than expected. They are saying that the revenue is less than expected and they are providing guidance lower than expected for the last quarter. This is good for the economy, for the Feds, because consumer spending will be feeling the pain. because these big tech companies are feeling the pain, revenue is less than expected, and maybe Fed will pivot in December for the last hike of the year. The next hike is expected to come 75 basis points. So if we check the Fed Watch tool, they are still pricing in 75 basis points as 87% probability for next week. So if we reach 375 4%, we are basically already there. So if we check, this is the yield for December this year. It's pricing in 4.1. So if we raise again the rates next week until 4, maybe in December they will not have to raise rates again, or maybe 25 or 50 basis points. So these earnings are key for the final interest rate hikes that Fed is thinking about for the last month of the year. So don't focus on these earnings. Don't focus on your investments. Stakeholders will feel the pain, but Nasdaq is trying to, Apple is trying to go green. Nasdaq is trying to push this pivot. So think about this. Let's focus on the Fed. I think this is good. Bad earnings means good forecast for hikes. GDP today came hotter, way hotter than expected, and market tanked. Maybe what we need is these companies to do bad, to people stop spending, to people start losing their jobs. Housing market is already cooling down, and big tech earnings going bad. It's good for us and for the Fed. So let's think about that. And we will see. But this is what I'm seeing from the bond market and from the yields. Usually they are not wrong. So don't focus on the earnings and think about the big picture and what yields are doing. As always, thank you for your time. I hope you liked the live stream that we got for the earnings. It was a special one, my first live stream of the channel. And I think I will be doing the same in other opportunities. But I hope you like that. Thank you for your time in this live stream and also in these all market recaps, updates, and forecasts. If you have any questions, do not hesitate to comment down below and I will try to respond to you. If you found this video useful and the live stream useful and all these videos useful, please like the videos, subscribe to the channel to receive notifications. And remember, I upload new videos every single day. Market forecast, market updates, and market recap. I appreciate your time. I hope you had an amazing trading day. Be careful if you are investing in these companies. Digest the news, let the dust settle, and plan your future trades. Tomorrow is Friday. Be careful, last day of the week, and we have to think about all this news. Discipline and risk management, as always, are key for your success. Stay safe, everyone, and see you tomorrow with the market forecast.